Good morning, I'm Peter Milios from the Finance News Network. Cyclical US stocks and those leveraged to manufacturing activity came under pressure during the trading session following the release of soft manufacturing numbers, which raised concerns about the strength of the underlying US economy. The Dow was the worst performing index, closing down 0.3%. The S&P 500 finished 0.11% higher, while the Nasdaq was the best performer, closing up 0.56%. The US manufacturing sector is showing signs of a slowdown in activity, with the ISM Manufacturing Index measuring 48.7 in May, below expectations. A reading below 50 is seen as an indication of a contraction in manufacturing activity. The Purchasing Managers Group's measure of new orders slid 3.7 points, the biggest drop since June 2022, to 45.4 in May. The Bookings Index now stands at the lowest level in a year, suggesting demand across the economy is weakening. Investors will now turn their attention to payroll data expected to be released on Wednesday and the May jobs report due out on Friday. In company-related news, Nvidia rallied 5% after it announced a suite of new artificial intelligence chips as it attempts to stay ahead of competitors. In further commentary, the AI giant said it will upgrade its AI chip architecture on an annual basis in its efforts to remain ahead of the curve. In commodities news, iron ore fell more than 4% on reports of Chinese stocks builds and sluggish downstream consumption. Oil dropped below US $79 a barrel after OPEC signaled its members will lift output. Sentiment was also impacted by the weaker than expected US factory data released earlier in the day. Turning to US sectors, following the news surrounding OPEC, energy was the worst performer, closing 2.6% lower. Tech was the best performer overnight. China's ongoing housing crisis persists into its third year, with new home sales dropping by 34% in May compared to the previous year, reflecting sustained weakness in the real estate sector. Despite signs of an uneven economic recovery, there remains criticism of insufficient government intervention to address the housing market challenges, as noted by many economists. Looking ahead to the Australian landscape, the SPI futures are pointing to a 0.2% fall. Thank you for listening and have a great day.